January 27th. Mark this date on your calendar. It is not just another Tuesday. According to the latest indicators and the warnings coming directly from Donald Trump's inner circle, this date marks a critical turning point for the American economy, and specifically for the retirement accounts of millions of hardworking citizens. They told you the soft landing was achieved. They told you inflation was under control. They lied. What is about to happen to your 401k is not an accident. It is a mathematical inevitability that has been engineered by decades of reckless spending and monetary manipulation. If you are holding a 401k, an IRA, or any traditional pension plan tied to the U.S. stock market, you are currently standing in the path of a financial hurricane. Donald Trump has been sounding the alarm, but the mainstream media is too busy focusing on political theater to show you the numbers. The warning is simple. The window to protect your life savings is closing, and the mechanism they will use to bail out the system is your retirement fund. Before we expose the specific data points and the executive actions that could trigger a massive shift on January 27th, I need you to do one thing. If you are tired of the lies and want to be on the right side of history, hit that subscribe button and turn on notifications right now. By liking and sharing this video, you are helping us wake up other patriots before it is too late. Join our community of the informed. Do not let them keep you in the dark. Now, let us look at the reality. Why January 27th? This date aligns with a convergence of critical debt maturity deadlines and a new aggressive policy shift regarding the U.S. dollar's global standing. Trump has repeatedly warned that the greatest threat to America is not a foreign army, but the destruction of the dollar as the world reserve currency. When the dollar weakens, your 401k might show the same number balance or even a higher one, but its purchasing power evaporates. This is the silent robbery. Most Americans look at their 401k statement and see a number. They see $100,000 or $500,000 and feel safe. That is the illusion. What Trump is warning about is a nominal gain, real loss scenario. Imagine your account grows by 10% this year, but the cost of energy, food, and healthcare rises by 20%. You have technically made a profit, but in reality, you have become poorer. This is exactly what the Federal Reserve and the Treasury have planned. They cannot pay off the $36 trillion national debt, honestly. They have to inflate it away. And who pays for that inflation? You do. The retiree living on a fixed income, the worker relying on a 401k that is exposed to a devaluing currency. The establishment fears Trump because he understands this game. His warning regarding late January is not just political rhetoric. It is a signal to those who are paying attention. We are seeing massive movements of capital by the elites. They are quietly exiting the traditional bond markets and moving into tangible assets. They know what is coming. They know that the bank term funding program and other liquidity injections were just temporary patches on a bursting dam. On January 27th, we could see the first major crack in that dam, specifically regarding the liquidity of retirement funds and the bond market that supports them. The system is rigged to keep you invested until the very end. They need your capital to provide exit liquidity for the institutional investors. When you hear Trump warning about a Biden crash or an economic catastrophe, he is talking about the systematic dismantling of the middle class's wealth storage. Your 401k is essentially a promise of future payment, but that promise is denominated in a currency that is being printed into oblivion. We are entering a phase of extreme volatility. And if you are passively holding a standard 60/40 portfolio, you are sitting duck. Let's dig deeper into the mechanics of this upcoming disaster. The Federal Reserve, led by Jerome Powell, has been playing a dangerous game of chicken with the American economy. They have created an artificial bubble to keep the illusion of prosperity alive during the transition of power. But here's the truth that Trump is hinting at. The liquidity that has been propping up the stock market and by extension your 401k is running dry. We are looking at a rug pull scenario that could be triggered as early as late January. You need to understand the relationship between the Treasury, the Fed, and your retirement account. For the last year, the government has been injecting massive amounts of cash into the system through the reverse repo facility. Think of this as a savings account for big banks. They have been draining this account to buy government debt and keep interest rates from exploding. But that account is nearly empty. When it hits zero, there is no more cushion. The market will have to stand on its own 2 feet, and right now, the economy's legs are broken. Trump knows that the deep state economists have set a trap. They want the crash to happen, but they want it to happen in a way that allows them to implement a new system, central bank digital currencies, CBDCs. To get you to accept a digital dollar that they can control and track, they first need to destroy your faith in the current system. They need a crisis. And a 401k collapse is the perfect crisis to make you desperate enough to accept their solution. This brings us back to January 27th. We are seeing a convergence of banking instability signals. Remember the regional bank crisis? Silicon Valley Bank, First Republic? That was just the tremor before the earthquake. The emergency lending programs that were set up to save those banks are expiring. The banks are sitting on hundreds of billions of dollars in unrealized losses. These are the same banks that manage the assets in your 401k mutual funds. If they go under, or if they are forced to liquidate assets to survive, the value of your portfolio will plummet overnight. This is why Trump's warning is so urgent. He is telling you that the smart money has already left the building. The CEOs, the politicians, the insiders, they have been selling stocks at record rates. They aren't buying the dip, they are selling the top. Meanwhile, your 401k advisor is telling you to hold on and ride out the storm. That is bad advice. In 2008, people who rode out the storm lost 50% of their wealth and took a decade to recover. Can you afford to lose a decade of your life? We are also witnessing a massive geopolitical shift away from the US dollar. The BRICS nations are trading in gold and local currencies. On January 27th, new trade agreements take effect that further isolate the dollar. When the world stops buying US debt, interest rates in America must rise to attract capital. When interest rates rise, bond prices fall. And here's the kicker. Most conservative 401k portfolios are heavy in bonds. You think you are safe in bonds? You are actually in the danger zone. The warning signs are flashing red. The credit card delinquencies are skyrocketing. Commercial real estate is collapsing. The manufacturing sector is in recession. The only thing keeping the S&P 500 up is a handful of tech stocks and the AI narrative. It is a house of cards built on a foundation of sand. Trump sees this. He knows that when the liquidity dries up in late January, gravity will take over. The correction will not be a slow decline. It will be a sharp, violent repricing of assets. So, what is the play? How do you shield yourself from the fallout of January 27th? The answer lies in exiting the casino before the house locks the doors. Trump has always been a proponent of tangible assets, of real estate, of things you can touch and control. But for the average 401k owner, you cannot just buy a skyscraper. You need a vehicle that acts as a shield against the devaluation of the dollar. History gives us the answer. Gold and silver. Look at what the central banks are doing, not what they are saying. China, Russia, India, and even European central banks are hoarding gold at a pace we have not seen in 50 years. They're dumping US treasuries and buying physical gold. Why? Because gold has no counterparty risk. It cannot be printed by the Fed. It cannot be hacked. It cannot be erased by a banking glitch or a digital currency reset. If the elites are moving into gold to protect their billions, why are you keeping your thousands in paper assets that are losing value? The mainstream financial advisors will tell you that gold is a barbarous relic. They will tell you to stay diversified in stocks and bonds. But diversification in a failing system is just diversification. If the ship sinks, it does not matter if you are in a first-class cabin or economy. Everyone gets wet. You need a lifeboat. For your 401k, this means looking into a gold IRA or a self-directed retirement account that allows you to hold physical precious metals. This is the legal loophole that allows you to move your money out of the vulnerable stock market and into real money without paying taxes or penalties if done correctly. Trump's warning about January 27th is essentially a call to action for financial sovereignty. He is signaling that the era of easy money is over. We are entering an era of hard assets. If you have an old 401k from a previous employer sitting there gathering dust and exposure, you are taking an unnecessary risk. Rolling that over into an asset class that has survived every empire collapse in history is not just a savvy move, it is a survival strategy. Do not wait for the news anchor to tell you the market has crashed. By then, the sell orders will be frozen. The websites will be down. The circuit breakers will be tripped. You will be locked in while the value of your retirement is decimated. We saw this in 2008. We saw this in 2020. The retail investor you is always the last to know and the first to lose. Do not let that happen this time. The timeline is accelerating. Between the geopolitical tensions, the debt ceiling debates, and the Fed's cornered position, the margin for error is zero. January 27th acts as a psychological and structural barrier. Once we cross it, the volatility will likely increase exponentially. You need to position yourself now. Get out of debt, reduce your exposure to the banking system, have cash on hand, and most importantly, harden your retirement portfolio with assets that respond to inflation, not assets that are destroyed by it. This is not about fear. This is about freedom. They want you dependent. They want you on the government dole. They want your retirement to be a monthly allowance from the state, paid in a digital currency that expires if you do not spend it. Trump stands against that. We stand against that. But we can only fight back if we are financially strong. Protect your legacy. Protect your family. Do not let the warning of January 27th pass you by. The signs are there for everyone to see, but only a few have the courage to act. Be one of the few. Thank you for watching Economy Echoes. I will continue to monitor the situation hour by hour. If any new executive orders or Fed leaks break before the 27th, I will bring them to you immediately. Stay vigilant, stay prepared, and God bless America.